Hi, everyone. Thank you so much. My name is Tanaya Macheel. I am a crypto reporter at CNBC. We have several. My coverage focuses a lot on markets and price action and investing trends, and we will talk about some of those trends on this panel. But I want to go down the line and have everybody introduce themselves, where you work, and what your sort of role at your firm and in the crypto ecosystem is.
Great, thank you, and thanks for being here. Matt Horne, I'm from Fidelity Digital Asset Management. We're a division within our traditional asset management business that's focused on building solutions in this digital asset space. I run a team of digital asset strategists that work with our clients across all client segments, so retail, advisory, institutional. I've been at Fidelity about 12 years, mainly in the legacy ETF business, and I've been in digital assets for about 5 years now.
Dan.
Hi. So 𝐏𝐀𝐍 Holdings and One Roundtable Partners, we're growth equity investors. AUM is about $1.5 billion. We've invested into 24 growth stage companies in the space. We also do quite a lot in the secondary market and special situations. 𝐏𝐀𝐍, which is the third company, is a company that we're operating now that is in the decentralized custody space. But I'm founder, CEO, and CIO of One Roundtable and 𝐏𝐀𝐍, and chairman of 𝐏𝐁.
Jason.
Jason Urban, Galaxy Digital. I run the sales and trading business there. Galaxy is a full-service financial services company that's specifically dedicated to crypto. And so we have markets business that's trading and sales, as well as investment banking, an asset manager that does public and private funds, and then an infrastructure business that does staking, mining, as well as custody service providing.
So my name is Owen Lau. I work at Oppenheimer. I'm a senior analyst there. I cover blockchain, digital assets, information services, and exchanges. So names like Coinbase and also Galaxy Digital, obviously. One firm I follow as well, a good company. And I work in this space since 2018 or so. So I've been following crypto for like 6 years.
So I want to start very basically with something in the title of the session, actually, which is the current state of crypto and blockchain. So let me know what you guys think, but it seems to me like this year, Bitcoin itself has had a lot of very isolated success. You know, it's been range bound for most of the year, but it's holding on to some good gains. We've got the ETFs, and it seems like there's a lot of interest there. It seems like people are not interested in ETH right now, which I'd love to hear from you on. And then there's everything else. You all sort of represent the institutional world in crypto. What is sort of your view on where the interest is? And Matt, let's start with you.
Yeah, so this was a huge year, in my opinion, for just getting capital now accessible to this asset class through the ETPs. I think most investors on their crypto journey start with Bitcoin. I think that's maybe why you're seeing a lot of interest in those products. It's been massive, right? Because there's over 30 trillion in advisory assets in the US that could not easily access spot Bitcoin exposure until you had the ETP. And I think throughout this year, it's only been 8 months or so since they launched. I think you saw an early adoption wave with retail. Then you saw the advisors come in, and now you're starting to see more and more institutional clients come in. So I'm incredibly encouraged by what we've seen so far with these ETP launches and the adoption curve on which a lot of these investors are on.
It seems like, okay, so earlier this year, we got the ETFs, Bitcoin hit an all-time high, and I think typically what happens is ETH follows in hitting that record, and then you see this long tail of other altcoins and crypto assets, and we just have not really seen the market lift this year. Is that, Dan, how do you see that? I mean, is that a reflection of a lack of interest or appetite? Has interest changed? Why aren't we seeing that?
Yeah, I mean, I think it's just temporary. There's been a lot of activity on layer twos that maybe's pulled away some interest. You had the recent, Uniswap movement off of ETH. That's sort of been an issue. I think people think about, okay, what's their revenue model? But honestly, Bitcoin, Ethereum, and I think now Solana have all achieved network effect, which just means I think those are the core assets of the space, and everything else is pretty much a venture project. I would have said, just Bitcoin and ETH, but Solana, I think in the last sort of 2-3 years has definitely made the case for itself. So I just, there's so many young people in this space, and they're so incredibly impatient. And if ETH underperforms for 3 months, you go on Twitter, and that whole community is suicidal, right? Which it is now. I mean, I don't know what you guys think, but it's totally nuts. And I'm sitting here thinking, well, it's an opportunity. And Solana, I think, is, made the case for itself as well. I mean, there's a whole other argument you can ask other people about whether they think meme coins are legitimate, or, that's been a lot of the traffic on Solana. But I think the defining event after the ETFs, I think that is right this year, is that there's been a tremendous movement on chain. So that the comfort and I think the number of people who are living wholly on chain has increased pretty dramatically, and Coinbase's base has had a big part to play in that. But
Does anybody on this panel like meme coins?
I mean, I think they're interesting. But I don't know. Go ahead. I'm sorry if I cut you off.
No, Dan, by all means,
are you trading them all day?
You can handle that grenade.
I don't know.
I mean, I felt like one thing I want to add is maybe because there are just like too many technical software upgrades as the focus for Ethereum, like in the past, and people may not fully understand and fully appreciate. For Bitcoin, it's easy, like inflation hedge or digital gold, right? Like you have to get that message across. People understand what you're talking about, what I'm buying. I'm not buying a software upgrade in the future. So, but for people who understand this space, they are excited about that because they know that it will get the system faster and cheaper. But now we have layer 2 solutions that that makes that upgrade not extremely excited right now. So that's my view.
The other thing you got to keep in mind is, yes, you can bifurcate the crypto ecosystem into TradFi and crypto natives, but the crypto native community is still very tribal. And so the voices that you hear echoing that and what people are getting behind, to your point, Dan, about, you wait 15 minutes and the weather changes. It's like San Francisco in that regard. People, if they're not seeing the gains immediately, the narrative kind of, gets drowned out. And so whoever's got the loudest voice and is getting their base going, it doesn't mean that there aren't interesting things happening. It doesn't mean that it's not valuable or usable. It just means that maybe there isn't a loud megaphone that's screaming at that in any given moment. And particularly with ETH, where you have a lot of very influential people, if they're not all saying the same thing at the same time, that megaphone gets, dissipated a little bit.
I would just add, Bitcoin went through its fight, years ago for its primary use case, and I think it's established itself as, non-sovereign digital store of value, very clear winner of that vertical. Whereas some of these other projects, right, Ethereum, Solana, are competing to a degree still for various use cases, right? So I think that's part of it too. I think also this obviously is a global macro panel, looking at the broader macro landscape. I think a lot of investors are looking at Bitcoin as a potential hedge, right, to some of this, and that's hence probably why you've seen some outperformance versus Ethereum this year.
So should we talk about the election? Right around the corner, and it's been, I wouldn't even say hotly debated, but it does seem for an industry that has insisted it's nonpartisan and loves to point to the growing bipartisan support that we see in Congress, it does feel like the sentiment has become a little bit more partisan as time has passed. Whatever happens in the next few weeks and the overhang that follows, is this a blip, or like what exactly is at stake for crypto with this election, which many have called the most important in crypto's time? Jason?
Sweet. In all seriousness, I think that this is an important election. What we really have to focus as somebody who loves crypto, believes in it, it can't be a partisan issue. And I do think that, yes, there's a narrative out there right now that says Trump will be great for crypto, but I'll also think that Kamala can be great for crypto. I think that what we've seen with the current administration has not been a very friendly landscape for all of us to operate in, and not because they're, sometimes they're antagonistic, but just the lack of commitment. Like, we've always asked for regulatory guardrails. I think that everybody here, we operate in institutional space, and that legal and regulatory clarity is important. I think that we're going to get that regardless of who wins. I think that we can then start to argue over the little pieces, but the internet isn't a partisan issue. Decentralized finance should not be a partisan issue. How that happens or how we enact that should be, like, we can talk about that and what's better for what constituencies. So I do think, though, that, come, inauguration day, it should be a better, we should have some tailwinds, and we should have a better environment for all of us to operate in.
I agree. I mean, my prediction is, I felt like right now we have that election overhang. But I mean, just like what Jason said, maybe Trump it's a little bit better for crypto. But if you look at opportunity agenda from Harris, I felt like she's like slowly getting there. So my prediction is, I felt like this overhang could be removed after election. One data I have been tracking is the stablecoin total market cap. It has been going up and up and up. Now it already exceeded the past peak, which happened in, I think, March 2022. So what that means to me is there are more new money coming into this space. They're just waiting for the right opportunity to deploy that capital. So for me, after we remove this overhang, my expectation is we probably see like high highs for Bitcoins and high trading volume. So, but we'll see.
Is that a prediction for this year?
That's my prediction this year.
Anyone else have a prediction for Bitcoin for this year?
Of course,
They don't do predictions.
we all have to. I mean, what are we doing otherwise? I mean, I think, we're definitely over 100,000, I think, within about 6 months. So I don't really think the election matters that much. It's a short-term thing. Look, it's clear if Trump wins, it's better. I don't think it's terrible if Kamala wins, but I don't think it really matters long-term. But there's so many other positive macro things going on right now, I think, that are supportive, including, we talked about ETFs, but ETFs, I think, are going to start picking up steam. You have interest rates coming down from the Fed and all around the world. You have, I think, the fear of a deflation coming out of China, I think, taking the edge off inflation here. So the backdrop becomes more favorable as well, liquidity backdrop. And I think that if that turns the wrong way, I think that's actually, over the next 18 months, that would be an issue. I don't see that. So.
Yeah, not to give price prediction, but I think you'll see continued institutional adoption. I think things like options on these spot ETPs is going to be interesting because it's going to give another lever of liquidity to the market, in addition to what we're seeing in the products themselves. So it could be encouraging for additional institutional money to come into space.
I want to circle back to stablecoins, and I am going to bring it back to Bitcoin. But why, when you were talking about that chart, which basically looks like that, why are stablecoins having such a moment right now? I mean, is it because Bitcoin has been range bound and people are just kind of parking their funds in stablecoins while they wait and see what's happening? What happens?
I think it's because of adoption. So going back to my statistics, so the last peak was back in March 2022. So the total market, we tracked the top 10 stablecoin market cap. In total, it was about $164 billion in March 2022. It was a painful 19 months period to go down from 164 to 120. But since then, it came all the way back up to $169 billion at the end of September, right? That process only took 11 months. Painful 19 months, very fast 11 months. But not many people talk about that. I felt like one thing is stablecoin, the adoption. all these ETF coming to the market, and people are getting more comfortable to do on-ramp and trust stablecoin. So when you look at the trend, the top 10 two stablecoins stand out. The first one is First Digital USD. The second one is PayPal USD. So what that tells me is, other than trading, I'm seeing more and more payment or remittance use cases coming into this space. So that's why I am pretty kind of like not bullish, but more positive compared to 12 months ago, because I see new money coming in, not just for trading, but also for some other use cases.
Yeah, but most of it is USDT and it's on Tron. So that's all Asian, dollar deposits that are building up. I mean, it's very clear. 18 months ago, there were almost no, there's very little USDT on Tron. So the Tron, I don't know if anyone wants to talk about Tron. I mean, it's
You can talk about that. You
Asian
can talk about
gambling,
that.
I guess, is
No,
what.
part of it also is
Yeah.
you're seeing the payment side of it. So there is an element of Tron that's Africa. And so, one of the narratives inside of the crypto ecosystem is banking the unbanked. And so you're starting to see some of that come to fruition, which I think the payments area is really interesting. The fact that the previous panel and many of the conversations we've had are talking about settlements, T+1, T+3. I mean, we settle T+1 for our clients, but it's a courtesy for those that can't settle atomically or same day, and it's mostly TradFi. So you see the real world use cases, and that's what really becomes interesting. It's been de-risked with the ETPs and with some of the things that have happened in the last 12 to 18 months, but you're seeing it starting to become, have a utility that unlocks the power of what we really think it is. And so that is the evolution of, finance.
What do you guys, I mean, it really is having a moment, not just because of that climbing market cap, but it seems like in the last few weeks, there's an announcement from everybody about how they're launching a stablecoin. Revolut in Europe is launching a stablecoin. I think Paxos is launching a new payments platform for stablecoins. State of Wyoming is launching a stablecoin. Why is everybody launching a stablecoin?
Well, look, I mean, it makes sense. Most of the stable coins are all dollar denominated. So why should there be 99% in dollar and no euro stable coin or yen stable coin or whatever it is? So I think, it'll eventually end up maybe 5 to 10 years from now mirroring the traditional currency markets. And if you think about it, they really, I traded currencies and other things for 25 years. There really are only 15 or 20 or so currencies, major currencies to trade. I suspect at some point, all currencies will be on some sort of blockchain and be tradable and fungible. Yeah.
So good.
I was just going to say, the other thing to keep in mind is you're hearing announcements now, but these things take, time. And so think about the interest rate backdrop that we were operating against. And let's be honest, having your own stable coin with significant float is a great business model, right? You get to clip the coupon on that or share that coupon, but it's a great business. And so you're hearing about these things now because they take time to build, but it's a good business. And there are use cases and people are starting to see that maturation and comfortable, people are comfortable holding them, traditional companies. And so it makes a lot of sense that people want to get in on that game.
I was going to say the same exact thing, that it's a great business to be in if you can, pay zero yield and earn 4.25% invested. And one thought I have had recently is how many do you need, right? How many dollar-based or euro-based stablecoins? And I don't know what the answer is there, right? So I think a lot of companies are looking at the space. They're looking at future consumers who are on chain. They want to have some relationship or touch point with them. So why not enter the space and try to grow stablecoin?
And so many of them are looking to be dollar-backed. Oh, and I think I was talking about this with you recently. Circle, who is the issuer of USDC, the second largest in the stablecoin market, dollar-backed, has a euro-backed stablecoin. It is like minuscule compared to USDC. What is the argument for sort of the strengthening of dollar and dollar dominance with, the proliferation of stablecoins over time? Anyone? I mean, a stat they love to float around is how stablecoin issuers are now collectively the 18th largest holder of U.S. Treasuries. So is there an argument to be made for dollar strength with stablecoins? Anyone?
Well, there's definitely a stability issue, right? So if you're thinking about, other currency denominated stables, right? If it's for the crypto natives, a place you return to for safety and you don't necessarily want to express a view, it makes sense to go into the most stable of assets. And so, but from a utility perspective, to Dan's point, there are projects, Galaxy, we're involved in a number of these different projects along the way that can be, can add value to either regional currencies or, specific, state currencies. So there's value to that, and you'll start to see that.
I think what you're asking is, is there a world in which dollar stablecoins actually contribute to the strength of the dollar? And I think, at 150 billion of face value, I mean, it's tiny. Could it be? Look, if I were in the U.S. government, I would try to encourage usage of dollar stablecoins globally. I mean, you should incentivize people to do so. I mean, it should be that it's trillions of dollars trading in dollar. It reaffirms the U.S.'s status and dollar status. And I mean, I think the only reason it hasn't come to that yet is just that people don't understand it down in D.C. And so I suspect that over the next sort of 4 to 8 years, as you have a younger group of people also move in, that there may be like pro-policies as opposed to, where we are today.
And I guess with the strengthening of the dollar, I mean, that's kind of a key catalyst for Bitcoin, right? It moves inversely with the dollar. So this is kind of broad and vague, but assuming that Bitcoin becomes the big success that we all talk about happening every single day, how do you see the balance of Bitcoin and dollar-backed stablecoins? Maybe there are a couple dominant ones, and the U.S. dollar. How does that future look to you?
Yeah, I think both things can happen. I think it's obviously a relative game when it comes to currencies. I think you can have Bitcoin appreciate in value as a store of value versus the dollar, while the dollar itself is strengthening versus every other currency in the world. I think as the Bitcoin adoption curve takes hold and more investors come in, the finite supply, the scarce asset that it is, it's going to have a nice support below it. And you could see that appreciate significantly over time. And I think at the same time, you could have proliferation of stablecoins, which increases demand for dollars. You could have a net new buyer of bonds, right, from the U.S. government while we're running deficits into the future. So I think this all can happen at the same exact time.
Yeah, I think like there are two, I mean, they can go in parallel, right? I mean, because Bitcoin, to me, it's again, go back to the narrative, which is the digital gold. But for stablecoin, people use that for on-ramp, and they can use that, go to DeFi and exchange to Bitcoin or go to payment. So I felt like, Bitcoin, you go back to the digital gold narrative, but stablecoin, you go back to, or maybe you explore the additional avenue for payment and maybe on-ramp and trading and that kind of that path. So I do feel like they can go in parallel, and they don't have to like fight each other and try to take the incremental dollar from investors.
Is there anything at risk for stablecoins with this election, be it the way the appointments play out, or if there is a sweep one way or the other? Stablecoins is one of the leading topics, I think, in Congress in terms of seeing crypto legislation actually come to life. Stablecoins, along with framework for crypto regulation, are sort of the top two things. Are we confident in the bipartisanship in Congress right now, or is there something at risk for this space in crypto specifically? Owen.
I mean, to me, I still see like the overhang in the near term, but for me, I'm still confident that we can pass the market structure bill and also the stablecoin bill, maybe in 2025 or 2026, but we'll see. I am confident, it doesn't mean that it will happen, but I just see there's still something happening in the Senate that there is like unwillingness to get this bill passed. This year, probably 5% or 1% probability. Next year, we'll see how the election unfolds.
Okay, I want to move on unless anyone has anything else to say about stablecoins. We talk a lot about institutional adoption of crypto / Bitcoin, and we've talked about the ETFs and the interest by institutions. Adoption by corporates, I think, is something that we don't talk as much about, just because it's not happening as much. But there's MicroStrategy. There are some obvious companies like Block and Tesla, Semler Scientific this year, holding Bitcoin on their balance sheets. And there was an interesting little detail that I think caught everyone's attention in a Microsoft filing last week, saying that at their upcoming shareholder meeting, they were going to be voting on this idea of assessing investment in Bitcoin. Where are we in this trend? At what point, again, adoption, it's slower than I think a lot of people in crypto have patience for, but at what point do any of you just think that you're going to see more adoption of Bitcoin by corporates? Jason?
So we've seen corporates start to poke around. We've had some conversations that are encouraging. The thing that the comparison I would make is it's a lot like 2018, 2019, where that education cycle has to take a long time. But then when it comes, it flips, and as soon as one or two do it, then a few more do it, because it moves from being something that I might get fired for doing to something that I might get fired for not doing. And so, but it has to start somewhere. We're starting to just see some of those green shoots. And it really is an educational cycle right now. Like, we are spending a lot of time talking about how it works, how the ecosystem works. It's not intuitive in the sense that, you have people at, say a treasurer at a large Fortune 500 company, they know how their banking works. They know how their investment works. They don't necessarily know, like, wait, I got to get wallets. I have to do what? What are my protections? So there's an education that goes along with that.
Yeah, I would agree with that. Education's key in this space. I think the corporate will be probably slower than most want. I do think the ETPs make it another avenue to easily access the asset class, and I think options on those will be helpful too, to maybe dampen some volatility. Because I think what keeps people away is going to be the volatility ultimately, and there's a lot of career risk involved here, right? You don't want to be first and get fired just for doing this one trade essentially. I think certain companies, it makes more sense for them to do it if they're in the space, or if they have a closely held leadership team that maybe has a very strong conviction in the asset. But I think generally speaking, they might be slower to adopt than other institutional clients.
Yeah, I don't see it for a while.
A while, like 5 years, 10 years?
Well, I don't know. You have a company in the S&P 500. Their business is not to take currency risk. So they'll either have to feel some insane FOMO that maybe their competitor's done it. But again, it brings with it a lot of volatility. I think even though vol for Bitcoin and ETH will go down now for a while. So I just, I don't see a tool and die manufacturer from Ohio deciding he wants 5% of Bitcoin. I think what's more likely is that you have some of these larger businesses in the space coming and doing IPOs, like Circle's mentioned, and eToro has announced that they're moving towards some sort of IPO, and there are a whole bunch of companies that are substantial companies. I think that's how traditional equity players who are not allowed to own currency will get exposure.
Can you go a little bit further on volatility coming down? I'm glad you mentioned IPOs because I have suggested that as something that kind of makes people feel that FOMO. But a lot of people out there are calling Bitcoin now boring Bitcoin. It's people trust it. We know it's not going away. But that volatility has been a key characteristic of this asset. So how do you see it moving forward with less of that?
I think it's going to go down. I don't think it's going to go away. I've sort of been thinking for this cycle we'd hit up somewhere around 150 to 180,000. So that's not really that big of a move from here, given previous moves. It sounds big. There will be a huge mania around that, but it's not really that big of a move. And then I suspect we'll have another bear phase again after that, and you could come back down to where we are now. So that would be another 60, 70% decline, or 50, 60%. So, I always say that this space is not really for civilians. Like, I don't think that you should just be out there trying to, speculate in cryptocurrency. It's very difficult. This is the hardest market I've ever seen by a factor of 10x. I mean, compared to the traditional market. So, but going up from 60 to 180 and then maybe back down to 70 or 80 or 100
Vol will be higher.
is not that high compared to what we had 5 years ago, 8 years ago. I mean, it's
Dan, you're
de
right. I
minimis.
mean,
Right.
you're seeing, if you look at Bitcoin vol, it's 50s and 60s. Like it's pedestrian. It looks a lot like oil vol, at different points, right? But I think as you move out the asset class, and you move a little into the longer tails,
Well, there's also no liquidity out there. I mean, you guys traffic in that stuff, right?
Right, that's-
it's
I mean-
really, it's just gaps and.
100%.
Yeah.
But if you look at that, for people who are looking, that implied vol that you're talking about traditionally, that mirrors the realized vol, and you see that as you move out. I mean, so much of the crypto ecosystem, if you look back 3-4 years ago, crypto was an option, right? It was either going to zero and people had it in their portfolios and were fine with it going to zero or it going to 180. Where now they look at Bitcoin and they say, well, Bitcoin's here, ETH is here, Solana is here, a handful of others are here, and so now it starts to look like a real asset class and behave like a real asset class, which is what it is. So as you move farther out the tail, yes, some of those will still have outsized returns in either way, in either direction, which also tells you that the volatility should be higher there.
I agree. I mean, I felt like earlier this year we had so many good news, like ETF and also halving, and even 6 months after halving, people talk about, if you look at the statistics, Bitcoin would try new high 6 months after the halving event. So I felt like we just repeat those narratives too much because we just don't have the catalyst, don't have some good events coming out from this space to support the crypto prices. But I agree with Jason. I felt like after the election, we may see more talking point like the regulations. Hopefully the bill get passed, and then maybe we have like more pro-crypto like president and also the Congress to support more innovation. And my expectation is still, I'm with Jason. I think volatility should go up a little bit after the election.
I mean, the Bitcoin vol is sitting on the 1 year somewhere in between the Magnificent Seven stocks. So single stocks that are quite volatile, that are widely held by most investors here in the US. But Bitcoin vol is pretty much in line with some of those names in that basket. And you want vol, right? Because most investors are just getting off zero with Bitcoin, maybe 1 or 2% allocation. But that vol is going in the other direction of the other assets in the portfolio, right? Which is the whole diversification story of why a lot of us are in this space here. It's a very interesting asset class in that when added to a traditional portfolio, it is pretty additive to the total risk of the portfolio. So I don't think we want vol to go away because, it'll be quite boring.
So I talk a lot about how the macro picture affects Bitcoin. Is there anything that we should be tracking in the opposite direction? Are there any macro trends that that are changing or being created because of Bitcoin and stablecoins and this whole crypto space, Matt?
So I think as an asset manager, looking out maybe 10 years, it's hard to predict how this space will evolve. But I think to what was said earlier, there's more and more investors who are natively on chain. They prefer to be on chain. And the traditional, asset managers like a Fidelity and others are going to have to probably figure out how do we meet clients in that new paradigm. So I think that's a big question to figure out future distribution of traditional strategies into a digital world, right? And I think that's where tokenization comes in and other opportunities there. So I think that's one thing that's probably top of mind for a lot of issuers here in the U.S.
Anyone have anything to add, Dan?
No, Matt did a great job there.
Jason?
I would say the one area where you start to see the Venn diagrams overlap a little bit is in AI. And if you think about competing for compute, like there could be some dynamics involved there, and thinking about how these data centers, which are currently big mining facilities, get repurposed in some way or start to compete for energy or compute in some capacity, whether that's validators or pure crypto, Bitcoin mining. I think that that's something that you can start to look at the interplay if you want to say, hey, how does the crypto story impact the macro story? I think that's one area where you should keep your eyes.
And then I think interest rate, right? This is obvious. When interest rate go down, usually token prices go up. And then the other thing is some kind of like geopolitical uncertainty. I mean, I'm not saying this is a good thing, but if you remember, go back to the war in Ukraine, like what people do, like they buy crypto and they also donate in crypto. So there are some macro events that could be the catalyst for Bitcoin and some other token prices.
I'm going to start with you, Owen, and I'd love to go down the line just to finish off. We talked about a couple different things here, but over the next, 5 years, the two key investing trends you're watching for the crypto space.
Number one is payment, the use case. Number two is the layer 2 solution. So how fast it can go, how fast it can process the transactions, and how lower the price it can go. So those are the two key trends.
Jason.
I will steal and agree with you on payments for sure. I think that that's one of the most interesting ways we're seeing crypto play into the ecosystem. I think the other one is the interplay with traditional assets and the crypto. So tokenized stocks and bonds, and how does that, RWA, how does that work inside of crypto? How does crypto facilitate that? And what does that become?
Are these all payments? Are we talking like within institutions, peer-to-peer, remittances?
I think it's both. I think if you think about the global economy and the lag right now to move money via the banking system, it probably costs you real dollars, 6%, 7%, 8%, and you can do that with real dollars for 50 basis points in some cases, all in round trip. I mean, the savings and the utility are going to be enormous.
What are you going to be watching?
Yeah, I've been so hopeful about RWA's tokenization of real-world assets, for a long time, and it's sort of nascent. But I feel this next up move, that's going to be a big focus. There's going to be a big rush, and there are enough players within the banking system, the traditional world, that I think get it and want it. It's a very difficult space in a way to predict out 2-3 years. And my way of thinking about it is just that I see that more value will move into the sort of overall digital asset ecosystem. So where exactly it moves is hard to say. There's about $3 trillion of value there versus $300 billion in the middle of 2019. So it's been a 10x in 5 years. I would say we probably have another 5, at least 5x, maybe 10x, I don't know. So it's just that value will move there, whether it's DPIN or NFTs or memes or payments or L2s. I mean, we didn't have this 3-4 years ago. The space has just become enormous.
Right.
So that's what I would, just say value moving in to the space.
Final word, Matt.
I think education is massive, always has been, and still will be over the next decade. Despite how far we've come, there's still a massive cohort of investors here of all types who need education on this space. So I think that's one thing to watch. The second is, sort of dovetails off that, is really, I think, the need for active management. I think a lot of investors in this space won't have the resources or the ability to navigate this ecosystem. We're all in this, and it's like every day.
Well, there are a lot of dead bodies in the active world in this space.
Fair
right?
enough. Yeah,
I mean,
fair enough. Fair enough. But I think guidance and some asset managers doing some stuff on behalf of clients is going to be in demand over time to help them navigate this space.
Thank you so much. Give it up for this panel.
Thank you.